Good morning, Wall Street winners. It is Thursday, March 6th, and we are seeing the impacts of tariffs across the board here today. We can see that tariff talks are back. The slight jump yesterday, if we look at the futures here and markets going into the green, were very temporary as expected. And the tariff pause for Canada and the US in the auto sector, which really caused the boom or caused the markets to go green. It wasn't a boom by any means, but caused the uptick, we'll call it, has now reversed, and we're headed back into the red. And I think we're going to probably end up continuing into the red for the next few sessions. We're seeing announcements around major US job cuts. That's not going to bode well for the economy. And we're seeing a lot of negativity in the market. That's the narrative right now, with the US administration dumping support, pulling all support for Ukraine. The European nations have stepped in or are stepping in, trying to come to an agreement and supporting Ukraine. But everything right now is basically upside down. And so are the markets. And I think that's likely where the markets will continue to head is in a downward direction. If we look at the top of the screen here, you've got crude down below $67 a barrel for April 25th crude futures. You've got the VIX up close to 24, up almost 2 points today. NASDAQ's off 320, 320, so that's a big decline. We've got Costco set to report after hours today. It's down significantly in the pre-market. I think that's going to continue. I'm confident Costco can come in with decent revenue and earnings, but I'm skeptical about a good future forecast. And we saw what happens these days when you don't have all three of those metrics in a positive. You just end up seeing the stock go down. So I would anticipate we're going to see Costco stock into the 900s. Um, Maybe not after market today, but I would think that within the next 2 weeks, this will be probably down in the low 900s. Lulu's already been hit tremendously, and it's down in the 340s from up as high as just over 400. So it's already been hit. We've got Walmart, which is bouncing around in the mid 90s. It's probably going to be one of the stocks that doesn't do so badly in an economic downturn or recession because multiple financial demographics, low income, middle income, high income, can all shop there and benefit from lower cost of goods and lower prices. But that said, they're still likely going to take a hit. So I see that stock coming down into the low 90s, if not high 80s, in the next little while. Home renovations will be put on hold. So Home Depot is a stock that I think we're going to see drop down into the 325, 330 range within the next month. Uh, and then we get into the transports. I think the transports are already trading low, but I think they've got lower to go because transport shipments will slow down. And excuse me, we're seeing that with the US auto, the tariff effect on US autos. Now, I know there's been a 30-day delay on that, but that's going to have a big impact on these companies, as is the transit of other e-commerce goods or other good manufactured goods in general, because the manufacturing of these goods is going to decline. Um, oil is in the tank, no pun intended. It has been dropping significantly. We need to wait to hear what the US administration's oil policy is before I think we're going to start to see oil turn around. And by that I mean something beyond drill baby drill, that will actually cause the oil producers to do more and invest in new drills, new wells, and new equipment. So uh, there could also be an impact here based on the tariffs on Canadian oil shipping in over 4 million barrels a day. If Canada finds an alternative source for that and uses an alternative pipeline to get that out to, say, a coastal storage facility in British Columbia on the West Coast, and then sells it internationally as opposed to the US, that could definitely be a shift in the dynamics of that relationship. Then we get into technology, and technology had an okay day yesterday, but it's about to get clobbered today. Um, just based on where we are with the Nasdaq. CrowdStrike down another $10 in the pre-market after its earnings announcement and fall yesterday. Again, looking at that stock in particular with a growth multiple of 700 times price to earnings, that stock is going to drop into the 200s if we get into a correction type environment, which it's definitely looking like we're heading towards. Um, all of the names, even those that were green yesterday, appear to be pulling back and falling. Microsoft had a pretty nice recovery yesterday, up $12. It's off $5 today. Um, Almost everything that went up yesterday, it looks like it's coming down today at the same amount or more based on the numbers on the screen here. So. Um, we also have Broadcom announcing today after market close, and it's off 5% in the morning session. So be interesting to see what the results are and the guidance from Broadcom. We could use some good news here. There's no question about that. Um, Meta had a pretty good recovery yesterday. It's off today. Netflix has been pulling back. One of the bright stars, if you will, in this are the Chinese tech stocks. So oddly enough, the Chinese economy is on a bit of a rebound thanks to some financial stimulus from the government. And it is Alibaba is seen as um, one of the top two AI companies right now in China based on its investments in AI and what it's been able to accomplish alongside DeepSeek. So I think we could see that continue to move in a positive direction. Um, and go against the curve here of all of the other tech stocks. Even TSM, who's committed to making investments in the US with factories and new jobs, is off $6 today, more than encapsulating its entire gain from yesterday. So we also see financials pulling back today. So financials, some of them had a good day yesterday, others were in the red, but some of the big names, I mean, Goldman up 11, almost $12 yesterday, down exactly the same right now in the pre-market. So it's just we're heading. This is not a buy the dip environment. This is we're on a downslide. It's like you're part of an avalanche right now, and we have to find where the bottom is that we're going to land on. That's the sad part of what's going on with the tariffs and all the pain that they're going to cause to the international economy. So we're in a bit of an economic war right now because one country wants to be a dominant player. They've come out and said that that's the US. They want the US to be the best again in all fronts, and they're going to do everything they can from an economic standpoint to try to position themselves that way with little interest as to what happens in the short term. Donald Trump said there's going to be a little bit of short term pain in the State of the Union, and with no regard for what happens to his trading partners. So that's where we are. Guard your capital and be risk averse. Good luck with your trades today, and we'll talk to you again soon.